As expected, the European currency extended losses yesterday, indicating bearish sentiment in the market. Despite attempts to enter a bullish correction, the euro remained under pressure, weighed down by a light macroeconomic calendar and ECB officials' commitment to further interest rate cuts. With inflation easing and economic activity slowing, the regulator is widely expected to continue loosening monetary settings, which in turn hurts the euro. Speaking of the British pound, the situation is the same. After sterling broke below the strong support level of 1.2970, bulls took over and pushed the price a bit higher. Although hitting a one-week low means that the downtrend remains intact, the pound-dollar pair still has a chance for a bullish correction. However, with the Bank of England planning to cut interest rates at a faster pace than previously thought, the medium-term outlook for the British pound looks rather bleak. Today's macroeconomic calendar is bereft of any major news reports from the euro area, except for speeches by ECB and BOE policymakers. Fed officials are also scheduled to speak today. In particular, Federal Reserve Governor Michelle Bowman's statement is worth watching. These days are full of political events, including the annual meetings of the International Monetary Fund and the World Bank Group. In addition, Russia is hosting the annual BRICS Summit, which began on Tuesday. These events are unlikely to support the risky assets, and the US dollar will continue to enjoy increased demand. Now let's move on to the technical analysis. The 1-hour EUR/USD chart shows that a false breakout at 1.0810 will generate a strong sell signal, dragging the euro down to 1.0783, 0761, and probably 0738. At this level, I recommend going long on a rebound to catch an intraday correction of 20-25 pips. Long positions at 1.0783 and 0761 can only be considered after a false breakout. In a bull case scenario, if the price breaks through and consolidates above 1.0810, the euro could rise to 0838 and even 0868 as a part of a bullish correction. At the 0868 mark, it would be a wise decision to go short on the rebound, expecting a 25-30 pip move. Going short at 1.0838 and 0810 will only be relevant in the event of a false breakout. As for the British currency, there is a high probability that this bullish correction will continue. After all, buyers have regained control of the 1.2972 mark. A false breakout at this level will generate a strong buy signal, driving sterling up to 1.3011. If the price breaks through and tests this level from above, the volume of long positions will increase, with the British pound climbing to 1.3053. At this mark, traders are advised to go short on the rebound to catch an intraday correction of 30-35 pips. Short positions at 1.3011 can only be opened after a false breakout. Alternatively, if bulls trading activity is muted and the price fixes below 29.72, this would pave the way for further losses to 1.2941 and 29.11. At this level, I recommend going long on rebound, counting on a rise of 25-30 pips. Going long at 1.2941 and 29.72 will only be relevant following a false breakout. Good luck to all.